My name is Melinda Good. I'm the Operations Manager and the Deputy at the World Bank. It's my pleasure on behalf of the World Bank Group to welcome you to this virtual launch of our latest Pakistan Development Update. The title this year is Navigating in Uncertain Times. As we begin, first I'd like to thank our speakers and panelists who are connected today. I'll look down so I make sure I get all of our esteemed panelists. Dr. Imtiaz Ahmed, well-known economic advisor in the Finance Division. Dr. Mohammed Sohail Rajput, the Special Secretary in the Commerce Division. Mr. Almas Haider, Chairman, Synthetic Products Enterprise. Dr. Wasim Shahid Malik, the SVP Memorial Chair Professor at the University of Peshawar. And Ms. Nida Mukhtar, our World Bank economist, who will also be our moderator today. So as we begin, I'd just like to note this is my 4th year here in Pakistan, and each time at this time of the year, as we do a launch like this, it seems like we're at a crossroads or a special moment. But this year, there's no doubt of that. We're here to talk about the economic impact and recovery from COVID-19. There's 3 points about Pakistan's response, the latest growth projections, and the importance of the role of the private sector that I'd like to make as an introduction. First, to note that Pakistan responded swiftly to the COVID crisis by escalating medical assistance and providing targeted fiscal and quasi-fiscal measures to mitigate adverse impacts on the economy. Second, in part due to these mitigation measures and on the budding signs of a recovery, we're expecting Pakistan to see economic growth of 1.3% this fiscal year. That's up from a contraction of 1.5% in FY20. My colleague Derek Chen will go into more details on the economic outlook, including the projected economic recovery over the next few years. However, the recovery remains fragile. Pakistan, like the rest of the world, is not yet out of the woods. Especially that's true with the current 3rd wave of infections that we're seeing across the country and with vaccinations starting, but only just starting. The containment measures for a 3rd wave, if it's protracted and extensive, could stifle what we're seeing as a nascent recovery. So this comes to the 3rd point. Pakistan's economic recovery will rely very heavily on the revival of the private sector. The pandemic, the lockdowns, and significant global contraction all took their toll on the private sector, and as we know, especially on small businesses. Despite the economic recovery we're seeing now, many of these smaller businesses remain vulnerable, and policy support is required to help them avoid permanent closure and further job losses. My colleague Rafai Khan and our distinguished panelists will dive into these issues later in the event. Now, like any crisis, the COVID crisis provides real opportunities for Pakistan to strengthen fundamentals that can help the country build back better and achieve a more sustainable growth path. There are 3 priorities that can help Pakistan navigate in these uncertain times. First, increasing the competitiveness of Pakistan's economy is key to unleashing the potential of the private sector, especially as the country is recovering from COVID. This will require continued macroeconomic stability, maintaining a market-determined exchange rate, improving the business environment, and supporting competition to promote exports. Second is expanding export potential. This is something we all know, but is even more important now than ever. Pakistan's export potential is $88.1 billion. This is about 4 times the actual current level, 4 times. This large gap places Pakistan in the top quartile of the distribution of countries with missing exports. The opportunity cost of Pakistan's missing exports is estimated at 893,000 jobs and $1.74 billion in foregone taxes. Some reforms that can upgrade the trade policy framework and help Pakistan export more include reducing the anti-export bias of the tariff policy, reorienting trade enhancement schemes, and negotiating market access with high potential destinations. More exports tend to increase productivity and economic growth, reduce the reliance on remittances and other external inflows, and buttress foreign exchange reserves in a more sustainable manner. And third is creating more fiscal space for priority spending. Now, the economic downturn and the pandemic fiscal stimulus package, plus the tax relief measures, have translated into a higher public debt trajectory. The corresponding higher debt servicing costs could hinder spending on development priorities, such as infrastructure, social protection, health, and education. COVID provides an opportunity for Pakistan to strengthen its fiscal accounts by rationalizing expenditures and improving revenue collection. This edition of the Pakistan Development Update goes into details in these areas, and I know we'll have a spirited discussion during this event. Our colleague Nida will moderate the event, but before we begin, I'd like to hand it over to Naji bin Hassan, our country director, who will welcome everyone to the event. Naji? Oh, sorry, we're having a technical. This is how we know we're navigating in uncertain times. It's always IT. We'll come back to Naji a little bit later in the event. Nida, let me hand it over to you to take us to our keynote speaker. Thanks.
Thank you, Melinda. I hope everyone can hear me. I understand the internet is a bit patchy with the storm. So Assalamu alaikum and good afternoon again, ladies and gentlemen, and welcome to the launch of the Pakistan Development Update for April 2021, Navigating in Uncertain Times. So my name is Nida Mukhtar. I'm an economist with the Macroeconomic Trade and Investment Team of the World Bank Pakistan office. And on behalf of the entire office and my team, I'd like to welcome you again. Pakistan Development Update is the World Bank Pakistan's flagship report, and it looks at macroeconomic developments and policy issues that are key for long-term development of the country. And of course, as Melinda mentioned before, keeping with the times, we have a focus on with this edition on the impact of COVID on the economy, especially on the private sector. As Melinda mentioned, my colleagues will be going into more details on both the macroeconomic issues and on the private sector, impact on private sector. And thank you once again to our panel who's here, including prominent guests from the government, the private sector, and the academia. Before I hand it over to our keynote speaker, just to let you know that please keep your questions coming in through the chat. We will try and pick them up later on in the event and we have dedicated question and answer windows to address these issues. And yes, and of course, we also have a Twitter hashtag, #PDU2021. So please keep tweeting as well. And so without any further delay, let me hand over to Dr. Imtiaz Ahmed, economic advisor from the Ministry of Finance. Dr. Imtiaz, over to you.
Thank you, Nida. Dr. Imtiaz, this is Najib bin Hassan. I just wanted to thank my colleague Melinda Good, my colleague Nida, and the whole team who contributed to this report, and welcome everyone. And thank you for participating to this discussion. Very much looking forward to the debate and the exchanges. Dr. Imtiaz, over to you, and thank you very much again.
Sir, thank you. Thank you very much. Bismillahir Rahmanir Rahim. Excellencies, ladies and gentlemen, Assalamu alaikum and very good afternoon. It is a great pleasure for me to attend the launch of the World Bank's flagship study, the Pakistan Development Update, and to deliver a keynote address at this important event. It is an essential and comprehensive document covering update on the Pakistan's economy, along with the challenges and structural reforms that are crucial to Pakistan's long-term economic growth. As you know, the world is passing through health and economic crisis. Pakistan is also suffering from these crises. Pakistan Development Update enables the researchers, academia, and policymakers to get a deep insight into the state of Pakistan's economy, outlook, structural reforms, and development challenges. Ladies and gentlemen, World Bank is a major development partner and has always helped Pakistan to meet its essential infrastructure needs in a way that ensures sustainability. World Bank is working with Pakistan to put in place social protection measures such as cash transfers and food rations. Besides providing support in the wake of COVID-19 crisis, the World Bank has been working with Pakistan to strengthen its key infrastructure, energy, agriculture, rural and urban development, social services, and economic growth. Ladies and gentlemen, you know COVID-19 changed the shape of global economy. The year 2020 saw a major downturn due to pandemic. However, with the approval of vaccine, it was hoped that there would be a turnaround in the pandemic and the end of this year, by the end of this year. But the third wave and a new variant of the virus have raised significant concern about the economic prospects. Due to COVID-19 pandemic, global economy contracted by 4.3% in the year 2020. However, global economic output is projected to expand by 4% in the year 2021. The pandemic has significant impact on private consumption, investment, and human capital accumulation in emerging markets and developing economies. The South Asian economy is projected to grow at 3.3% in year 2021, after contraction of 6.7% in last year. The economic contraction due to COVID-19 has led to a sharp rise in poverty and unemployment in the South Asian region. Ladies and gentlemen, like the whole world, the pandemic contracted the economic growth in Pakistan. In order to contain the spread of infection, partial lockdown was imposed in March last year, which included the suspension of air and road transport, a ban on religious, social gathering, and closure of all non-essential business and schools, which was gradually eased out. This disrupted domestic supply and demand and affected both services and industrial sector of the economy. However, Pakistan is not the only country whose growth has been contracted. There are many other countries that have seen significant contraction in their economic growth. Pre-COVID, Pakistan was recovering and moving on stabilization path under the IMF program. The government made considerable progress toward macroeconomic stabilization. The key measures initiated included a shift to market-based exchange rate regime, fiscal consolidation, an upward adjustment in energy prices, and tightening monetary policy, all of which helped to reduce domestic and external imbalances of the economy. Particularly, the fiscal deficit and current account deficit narrowed significantly. However, the outbreak of COVID brought multifaceted challenges for Pakistan. The GDP growth for the fiscal year 2020 is estimated at negative 0.38%. Agriculture sector recorded a growth of 2.67%, whereas industrial sector contracted 2.64%, and services sector also recorded a negative growth of minus 0.59%. Ladies and gentlemen, according to special survey of the Pakistan Bureau of Statistics, half of Pakistan's labor force was severely hit by the crisis. It is estimated that more than 20 million workers lose their job, and an additional almost 7 million workers saw a decline in their labor income between April to July 2020. The government of Pakistan has acted in a timely and well-calibrated manner and announced largest ever fiscal stimulus package of rupees 1.24 trillion. Further, a relief package for construction sector was also announced. Government also launched a SARS emergency cash program. Similarly, State Bank of Pakistan also responded timely through appropriate monetary measures. Government's current economic strategy is to put the economy on the fast recovery and to create employment opportunities through various long and short-term measures in different sectors of the economy. These measures will bring sustainable and inclusive economic growth in the country. Ladies and gentlemen, it is very encouraging that the economy is witnessing a turnaround since the start of current fiscal year. The current account deficit, which narrowed 78% last year, is surplus during the first 8 months of ongoing fiscal year. And remittances posted a growth of 24%, Tax collection also grew by more than 10% and reached above 3.4 trillion rupees. Despite fiscal pressure from COVID-19, Pakistan made visible attempt at fiscal consolidation. Fiscal deficit contained at 2.5% of GDP in first half of current fiscal year. Primary balance posted a surplus of 237 billion rupees. During July to Jan 7 month, LSM recorded a growth of almost 7%. Cement dispatches increased by 17%, and oil sale increased by more than 16%. CPI inflation, consumer price index inflation, recorded at 8.3% during the last 9 months. Government is taking policy measures, administrative and relief measures to bring price stability in the country. Investment is also recovering due to higher long-term private borrowing and increase in capital goods imports. Ladies and gentlemen, coming over to challenges, Pakistan's key economic challenge is to keep the economy on inclusive and sustainable growth path. Last balance of payment crisis, which were immediately followed by the COVID-19 pandemic, necessitated specific measures to protect people's health. Government took bold measures to restore internal and external equilibrium. Fiscal, monetary, and exchange rate policies were implemented and were successful in bringing back equilibrium in the balance of payment, and the economy is in process of recovery. The biggest challenge to the economy right now is the COVID-19 pandemic that sent sharp waves throughout the economy. The government provided largest ever fiscal stimulus package and started vaccination that would greatly slow the pandemic and thus make it easier to remove restrictions on some subsectors of services without causing surge of cases. Ladies and gentlemen, to cope with the challenges, Government of Pakistan is focused on bringing improvement in all sectors of the economy. Through various measures, mainly these includes National Agriculture Emergency Program, Rabi package to reduce input costs for the farmers, minimum support price of wheat has been increased to uplift the industrial sector, withdraw tax refunds, and other incentives have been provided. Special package for construction sector is introduced. Relief are provided to export-oriented industries under fiscal and monetary measures. Ease of doing business reform is under process. Investment promotion strategy is providing facilitation for investors. And similarly, national tariff policy and e-commerce policy are also other facilitations. Incentive under Pakistan remittances initiative programs, prudent fiscal policy, and enacted Public Finance Management Act 2019 for a more discipline in budget and financial management. Coming over to medium-term outlook. Ladies and gentlemen, Government of Pakistan is committed to motivate investment in potential sector of the economy, to enhance productive capacities, and to stimulate economic growth. In turn, it will provide significant support in creating jobs and reducing unemployment in the country. Recovery and economic activity still depend on global conditions. However, the growth is set to accelerate in fiscal year 2021 as domestic demand is recovering. In medium term, it is expected to pick up through further recovery of industrial and services sector, thus boosting the growth prospects. Current economic development signify that the government is committed to manage the national economy in an efficient manner to achieve higher, sustainable, and inclusive economic growth. Ladies and gentlemen, at the end, I would like to thank the World Bank for organizing the event to launch the Pakistan Development Update. I am sure this valuable document has a lot of latest knowledge and best policy guidelines which need to implement in true spirit. Best wishes and good luck for all. Thank you very much.
Thank you, Dr. Imtiaz, for that very comprehensive overview on the economy and on government's response to the pandemic and the economic imbalances in general. I will now invite my colleagues, Derek Chen, Senior Economist for Pakistan, and Adnan Ashraf Guman, Country Economist for Pakistan, to complement the discussion that you have already started on macroeconomic developments in Pakistan. And just again, to remind everyone, please keep your questions coming in through the chat, and we will address them after this presentation. Over to you, Adnan.
Thank you very much, Nida, and good afternoon to all our distinguished guests and all who are connected. I'll just share my screen. Just a moment. I hope this is visible to everyone. So first of all, again, thank you to Nida, and good afternoon to all the distinguished guests and all the participants who have connected, and thank you for joining. So I'll be going through this part of the presentation, which will cover the initial part of the report, along with my colleague Derek Chen. And the question that we have tried to answer in this part of the report is, how has Pakistan's economy been doing since the onset of the COVID-19 pandemic? And this is an interesting question because Pakistan is one of those countries that does not publish quarterly real accounts, but still we have leading indicators from all the sectors of the economy to measure the economic activity in the first part of the fiscal year, which is July to December, and see in which direction the economy is headed. So it is visible that Pakistan has been showing signs of a fragile economic recovery, and we have tried to look at it through different leading indicators. One of the leading indicators is the community mobility data from Google, and this kind of proxies for the economic activity, particularly in the services sector. So we see that people movement climbed around 40 to 60% in April 2020 at the peak of the first wave of the pandemic, when widespread lockdowns were imposed by authorities, which was very well elaborated by Dr. Imtiaz as well. Now, after April, when the lockdowns were eased, and it was a gradual process, mobility increased in all the sectors measured by the Google mobility, and we saw a recovery to the pre-pandemic levels. And by the end of the fiscal year, we saw that the mobility data showed that things have gone back to the pre-pandemic level. And since the beginning of this calendar year 2021, which is the second half of the fiscal year, mobility has exceeded the pre-pandemic levels, which is obviously a very positive sign. Now we'll look at the business confidence, which is measured by the business confidence survey conducted by the State Bank of Pakistan. And here we are basically looking at values above 50, which imply that firms are becoming more and more optimistic about the future. Here we see the same story as we saw in the previous slide, that we see that the sentiment really plummeted in the April and May 2020, and after which it recovered by July. And by the end of the fiscal year, firms were measured to be more optimistic than they were before the onset of the pandemic. I'll stop here and I'll request my colleague Derek to go through the remaining of the presentation. Thank you, and we'll look forward to receiving questions.
Thank you, Adnan, and thank you for everyone for connecting. So turning over to inflation, we see that headline inflation, consumer price, measured by the Consumer Price Index, for decline to an average of 8.6% year-on-year for the months July to December 2020. This declined from an average of 11.1% year-on-year for the months July to December 2019. So this is a substantial decline in inflation, and a lot of it was due to the drop in economic activity that occurred during the pandemic, when the lockdowns were implemented and created some spare capacity in the economy. For the next slide, please. With the decline in inflation, Anand, next slide. With the decline in inflation and the slack in the economy, the State Bank of Pakistan, which is the central bank, very decisively reduced the policy rate by a large 625 percentage points during the months of March to June 2020. And this led to, and since then, they've maintained the policy rate at 7%. Now, this implies that the real interest rate is actually negative, with inflation being higher, right? This low real borrowing cost actually induces private consumption and investment to grow, and by doing this, it supports the economic recovery. Next slide, please. Turning over to the external sector, Pakistan's current account recorded a surplus during the first 6 months of fiscal year 21. And this is the first semi-annual surplus since the year 2011. Turning over to the specifics, we see that for the first 6 months of fiscal year 21, the current account surplus came in at $1.1 billion, compared to a deficit of $2 billion for the first 6 months of fiscal year 20. And this largely was due to strong remittance inflows, which actually grew by 25% year on year over the first 6 months to reach a record of more than $14 billion over that period. Next slide, please. At the same time, the trade deficit widened, right? Why? Because total exports, which is the exports of goods and services, actually contracted over that period by 3.8% year on year. At the same time, total imports of goods and services actually grew by 1.4%, which is in line with what was happening in the domestic economy. So with this, we had a trade deficit that widened, but because of strong remittances, the current account was able to register a surplus. Next slide, please. Turning to the public sector, the fiscal deficit actually widened over the first 6 months of the fiscal year. The Pakistan consolidated fiscal deficit came in at 1.1 trillion rupees for the first 6 months of the fiscal year, wider than the deficit a year earlier, which was just under $1 trillion rupees. And this was primarily because expenditure growth was stronger than total revenue growth. We see down here that total revenue growth in the first 6 months of the fiscal year grew at 3.7%. And this was to a large extent due to double-digit growth in tax revenue. On the other hand, expenditure grew at 6.2%, which is faster, primarily due to interest payments and strong provincial current expenditures. Next slide, please. The wider deficit led to public debt increasing as a share of GDP. By end of December 2020, public debt stood at 87.9% of GDP, slightly higher than the 86% of GDP at the end of December 2019. Next slide, please. So now we turn to our World Bank economic outlook. So Pakistan's economic growth is projected to gradually recover, but remain below potential growth over the next few years. GDP growth for this year, FY21, is expected to reach 1.3%, which is higher or better than the estimated contraction of 1.5% in FY20. However, GDP growth is expected to gradually strengthen to 2% in FY22 and 3.4% in FY23. Now, this baseline economic forecast is highly uncertain, especially given the third wave of the pandemic, which is currently infecting the country. In addition to the uncertainty, economic activity is expected to be dampened by fiscal consolidation measures that are associated with the resumption of the IMF stabilization program. Turning to our current account deficit, we expect that to narrow in fiscal year 21 to 0.8% of GDP, which is slightly smaller than the 1.1% deficit that we saw in FY20. The current account deficit is expected to widen to an average of 1.5% of GDP for fiscal years 22 and 23. And this is because, to a large part, imports are strengthening or expected to strengthen in line with the domestic economic recovery. Exports, we assume, will start growing from FY22 in line with the recovery of the global economy at that time. On the other hand, remittances, which have been very strong, are expected to moderate from recent highs over the next few years. Turning to the fiscal balance, the fiscal deficit we assume will remain high this year at 8.4% of GDP, partly due to the low economic activity. However, with critical revenue enhancing reforms, we expect the deficit to gradually narrow to 7.8% of GDP in FY22 and then to 7% in FY23. Partly due to higher interest payments, we expect public debt to peak at 94.4% of GDP in FY22, but thereafter will be edging down because of the stronger economic growth as well as a smaller primary fiscal deficit. That's all for our presentation on the macroeconomy today. Thank you very much, and back over to you, Neda.
Thank you, Adnan and Derek. And we will now take 10 minutes to address some of the questions that have come in. So let me check this. And okay, so for the first question, it is, how does the third wave of the pandemic in Pakistan affect the economic outlook? So Adnan or Derek?
You want to go first, Adnan? Go ahead.
Yeah, so thank you very much for raising this question, Nida. So it really depends on how this wave of the pandemic evolves and what are the measures taken by government to minimize the impact of this wave. As we saw in the first wave, the actions taken by government really culminated in or decided the intensity of the economic impact. So if the intensity increases and government is forced to impose stricter measures, that will definitely have an impact on, particularly on the services and trading sector, which is the largest contributor to the GDP, as well as contributes significantly to the employment creation. So it would really depend on the intensity of the infection rates from now onwards. I'll stop there. Thank you.
Derek or Dr. Imtaz, you want to add in to what Adnan has said?
Nothing from me. I think that was a very comprehensive answer. Thanks.
I think Adnan has responded in a very comprehensive way. So it depends on intensity and duration of the third wave.
Okay, our next question is, what are the reasons that Pakistan cannot manage its trade deficits, and what are the policies government has to manage these trade deficits? So historical reasons. So Adnan and Derek, I'll go to you first.
So I'll try to address this briefly. So historically, the source of trade deficit in Pakistan has been lagging exports rather than the imports itself. Pakistan is a big economy, and imports are quintessential to the health of the economy. but unfortunately, our competitiveness has been declining over a period of time due to various reasons, which start from the business environment to the investment climate to the competitiveness in terms of inputs used by the private sector. But I think it's a long-term agenda, and the current government has taken initiatives and steps which will help. Unfortunately, COVID has caused kind of like a stop-start for the moment being, but we are hopeful that this agenda will be implemented once the pandemic is under control. Thank you.
Dr. Imtiaz, if you'd like to add on to this, or Derek?
I'll go first. Sorry.
Yeah, sure. Go ahead.
So I agree with what Anand said. It's more important to encourage exports than to manage imports. So one thing that we have seen actually in recent months is that Pakistan's imports, while they've been growing, a lot of it is due to imports of machinery, which is actually very good and necessary for investment to grow up. So increasing imports itself is not alarming. Part of it depends on the type of imports, and from what we see, it is not bad, right? Right now, the type of imports that you are getting in is necessary for investment, and many firms will tell you, in order for them to export, they need to import. One thing that countries have thought about in terms of trying to reduce current account deficits is to slash energy subsidies, because when you have energy subsidies, you're making energy cheaper than the rest of the world, and this leads to more than optimal consumption, right? Just normal supply and demand. So one way that could be easily done, although maybe politically challenging, would be to reduce energy subsidies so that they're more in line with global prices. Thank you.
Thank you, Derek. Dr. Imtiaz, do you want to add anything to this?
No, I think these are the main factors which are already highlighted.
Okay, great. Moving on. Sorry, we have a question on, so we have seen all macroeconomic indicators worsen. What is the way forward, and what is the projection for poverty and unemployment? And Dr. Imtiaz, for this, I would like to start with you, given that you already mentioned information on unemployment as part of your keynote address. So please.
If you look at the key economic indicators, so most of the indicators during the last 8 months, which is available, they are not depressing, they are encouraging indicators, like a large-scale manufacturing sector. Last year it was in negative, and now it has recorded a growth of 8%. Similarly, if we look at the cement dispatches up to March, they have increased more than 17%. And oil sale also increased by more than 16%. So these are the indicators which shows economic activity is taking place. And certainly it will have positive impact and trickle-down impact on employment and other business activities. Similarly, if we look at the agriculture sector, the credit for agriculture sector also increased, credit for private sector also increased, and government has launched the program of Rabi package for the farmers, which is also supporting agriculture sector. Then agriculture major crops other than cotton, all crops have much better growth as compared to last year. Even sugarcane production is more has recorded a growth of more than 10%, and rice also recorded a growth of 14%. So maize is also better as compared to last year. So these are the basic available indicators which shows that economic activity, although there are risks and other due to COVID and global slowdown, but the economy due to government facilitation and other measures are moving on recovery path.
Thank you, Dr. Imtiaz. Adnan and Derek, I know this is not your area, but anything you can say about a potential impact on poverty?
Let me have a go of it, and maybe Adnan will want to add. So I think there have been some estimates that poverty did see a sharp increase in fiscal year 2022, but some data indicates that the job market has seen some sort of a V-shaped rebound, and in which case should help a lot of the informal workers. But we are still looking forward to formal data of that. Right now, I think what we have is just surveys. So looking forward to actual publication of labor statistics on that. Thank you.
The answer was very comprehensive by Dr. Saab and Derek. And I'll second Derek's point that because a big chunk of Pakistan's employment is in the informal sector, so we'll have to wait and see how things unfold, particularly with this third wave, that how much of the scarring is actually happening to GDP in Pakistan and productive capacity, and that will basically decide what happens to unemployment and vis-a-vis poverty as well. Thank you.
Thank you. So I have just two, I think given the time, we'll take two more questions. One is, what explains the increase in revenue during what was a fairly difficult year? I believe, Derek, I'll pass this on to you.
Thank you, Neda. So I think looking at the chart that I showed just now, some of it was due to, a lot of it was due to increases in tax revenue. But I think one thing that the government should be given credit to do was they were, I think, to some extent able to increase the petroleum levy. And given that prices actually declined, they got a sizable chunk of revenue from the petroleum levy. But of course, Dr. Imtiaz can reconfirm that. Over to you, Dr. Imtiaz.
Tax revenues have recorded a growth of more than 10%. And certainly there are some measures from the government, as well as there are some improvement which tax machinery has made in their tax administration. So as a result, there are one side, there are some government measures, and other side, there is improvement in tax systems. So that's why other main factor, I think, is, as I have mentioned, that large scale manufacturing is picking up. Which is also one main factor that when the industrial sector is performing better. And if we look at the tax revenue structure, so more than 60% of the taxes are collected from the industrial sector. So that's why taxes are increasing, and our FBR is very much confident that they will perform much better in tax collection during the remaining 3 months. Thank you.
Thank you, Derek and Dr. Imtiaz. So one final question from the participants. This is, I would take give this to Dr. Imtiaz because it focuses on what the government is doing. So what are the key areas in which the government is focusing on in the short run to improve the lives and livelihoods of the people at large, particularly to address the disrupted food supply chains and rising food inflation, which leads to declining purchasing power and massive unemployment?
Thank you. I think this is a very good question. As far as the government measures are concerned, certainly government initiated the Prime Minister Agriculture Emergency Program. Under this program, 13 mega projects to enhance agriculture and rural productivity at the cost of rupees 277 billion were launched, and these projects are under implementation. Secondly, government also launched the construction package, which is also under implementation, and various facilitations are provided. These are the more, you can say, these are the economic activities which are more labor intensive, and they create economic activity for the people who are living in rural, urban areas, and they have more forward and backward links with more than 30 industries. So these business activities which will develop due to these government measures, they will provide employment opportunities on one hand. Second hand, the agriculture incentive will enhance agriculture productivity. And as a result, supply of agriculture crops will improve. And on the other hand, purchasing power of the people, when their income, their employment will increase, they will get more income and their purchasing power will increase. So on the one hand, the availability of the essential food items will increase. On the other hand, the purchasing power of the people will improve. So certainly over a period of time in coming months, the situation will improve in a very much desired way. Thank you.
Thank you, Dr. Imtiaz. This was very useful and on the point, like when addressing this question. I think for now, we will put a pause on the question and answers, but please do keep them coming in. We will pick them up in our next question and answer session. So now let me turn to my colleague Rafi Khan. He's an economist in the Finance Competitiveness and Innovation team in World Bank Pakistan, and he will give a presentation on the impact of COVID-19 on the private sector. So over to you, Rafi.
Thanks a lot, Nida. I hope I'm audible and visible. Yes? Okay, phenomenal. Perfect. Thank you so much. Very good afternoon to you, ladies and gentlemen. As Nida mentioned, my name is Rafi Khan. I'm an economist with the Finance Competitiveness and Innovation Global Practice of the World Bank Group. And today I'll be giving a very short presentation, only 10 minutes or so, on the impact of the COVID crisis on the private sector in Pakistan. The results encapsulated within this presentation and I'll be walking you through are primarily based off of 2 waves of business pulse surveys that we administered in Pakistan over the last few months or so. The first survey was administered in the months of June and July 2020. This was a survey that was administered to a total of 1,515 firms operating across the economic spectrum in Pakistan in the different sectors of the economy in the different provinces of the country, and most notably and perhaps most importantly, this was a survey that was administered to firms of different sizes. So we interviewed some of the smallest firms operating in Pakistan, and at the same time we also interviewed some of the largest firms operating in Pakistan, including firms listed on the stock exchange. Now, the reason why we decided to interview such a broad array of firms was primarily because we wanted to get a more nuanced picture of the impact of the COVID crisis on the private sector. As we know, the private sector is not a monolithic concept. The private sector is comprised of heterogeneous entities, which is precisely why we decided to interview such a broad array of firms. The second wave of the business pulse survey, or the second round of the business pulse survey, was administered fairly recently, so just a few months back or so, in the months of Jan and Feb 2021. And this survey was administered to the same set of firms that we administered the first survey to. We managed to complete a total of 602 interviews as part of the second wave of the business pulse survey. And the results that I'll be showcasing in the presentation today are primarily limited to the firms that we managed to interview both in the first wave of the business pulse survey and also in the second wave of the business pulse survey. So the results, fundamentally at a very high level, are constrained to the true panel. Now, before I move to the impact of the COVID crisis on the private sector, let me just say a quick few words on the impact of the crisis and why the impact was as large as we've witnessed over the last few months. So Dr. Imtiaz also mentioned this in his keynote speech. He mentioned how the global economy contracted by 4.3 percentage points in the last calendar year. This was absolutely massive. This was the deepest, largest recession that we've witnessed over the last 7 decades, ever since the end of the Second World War. So this was absolutely massive. What we also know is that the global economy is in the green at the moment. The global economy, for the most part, is on an upward trajectory. But having said all of that, there's a lot of uncertainty in the system, and this uncertainty will keep bearing down on demand in the coming months or so. So there's a lot of uncertainty. But the question remains, why was the impact as large as we've witnessed over the last few months? The simple answer, which is also quite complex at the same time, is that this crisis was not the manifestation of a single shock. This was not a supply side shock or a demand side shock or a shock emanating from the financial sector. Quite the contrary, this shock was the confluence of multiple different shocks. So when COVID struck, supply chains broke down. There was a complete collapse in demand. There was a significant tightening of financial markets. And all of this was significantly exacerbated and aggravated by uncertainty percolating in the economy. Uncertainty which is still percolating in the economy and which will keep bearing down on demand, as my colleagues Adnan and Derek mentioned in their presentation. Now let me move on to the heart of the presentation on the impact of the COVID crisis on the private sector. And the headline message in this particular slide is that the impact was large, it was cross-cutting, and the COVID crisis impacted economic entities operating across the economic spectrum in Pakistan. But what exactly does that mean? So let me give you a more nuanced picture. Let me go into the nuts and bolts. And when I go into the nuts and bolts, I'll be talking about the operational impact, the impact on sales, the impact on employment, and at the same time, the impact on cash buffers. But I'll be starting off with the operational impact because that's perhaps where the meat lies. So what we found in the first administration of the Business Pulse survey, this was back in June and July, what we found was that less than a third of all the firms that we interviewed were fully operational. Now, this is a really interesting statistics. And I say it's interesting because at that point in time, in June and July 2020, the vast majority of all the restrictions that had been imposed by the government had already been lifted. And despite all that, despite the fact that the government had already eased a significant amount of restrictions, less than a third of all the firms that we interviewed were fully operational. This is a testament to the intensity of the crisis and how it impacted the private sector. What we also found was that the vast majority of all the firms that we interviewed were either temporarily closed, permanently closed, or were operating under reduced operation. What we found was that 9% of all the firms that we interviewed had shuttered their operations for good. But there's perhaps a need for a more nuanced perspective. And a nuanced perspective is that the impact was not homogeneous, it was quite heterogeneous. So what we found was the impact of the crisis on exporters, for instance, or on larger firms, or on older firms was significantly lower than the impact on non-exporters, on younger firms, on smaller firms. So there is this need for this nuance. The operational impact naturally translated into an impact on sales, and what we found, ladies and gentlemen, was that sales went down or collapsed by 27 percentage points as a result of the COVID crisis, the median being a decline of 30%. And we compared sales in the month of June and July with the pre-COVID baseline of Jan 2020. So the impact on sales was quite significant, and at the same time, just like the operational impact, the impact on sales was also quite heterogeneous. Moving on to the impact on employment, naturally, an impact on the
Rafi? Hi, Rafi.
Yes.
Sorry, we're getting requests for you to slow down a bit, just so that they can capture all the information. So, sorry to interrupt. Go ahead.
Apologies. No, makes sense. My apologies, guys. I have a tendency of speaking really fast, so I will try to slow down. So the impact on the operations and on sales naturally translated into an impact on employment. And the impact on employment, quite contrary to the impact on operations and on sales, was not necessarily as large. What it basically means is that the vast majority of all the firms, as opposed to using more draconian measures of adjustment, of labor adjustment, they preferred or used more nimble measures, so to speak. So what it means is that as opposed to laying off their employees, most firms that we surveyed in Pakistan, and this was back in June and July, most firms that we interviewed had either reduce the wages of their employees or send their employees on paid holidays or unpaid holidays or reduce the working hours of their employees. But having said that, a lot of firms still did lay off their employees. And what we found was that 13% of all the firms that we interviewed in the first wave of the Business Pulse survey had laid off their employees. Moving on to the impact on cash buffers, again, the impact was large. What we found was that on average, firms had cash buffers for about 66 days, but at the same time, having said that, there's perhaps a need to caveat this particular statistics by mentioning that the vast majority of the firms that we interviewed, almost 60 or 70%, had only had cash buffers for less than a month or so. So what we know so far is that the impact was large, but what we also know is that a nascent recovery has taken hold over the last few months. And that's abundantly obvious to us from the administration of the second Business Pulse survey, and that's also obvious from the two graphs that are in front of you. Let me start off with the graph on the left side. And what the graph on the left side tells you is that in contrast to the first wave of the Business Pulse survey, when only 28% of all the firms were fully operational, in contrast to that, in the second wave of the Business Pulse survey, we found that 51% of all the firms reported being fully operational. That's a significant improvement over a period of 4 to 5 months. And this improvement was, by the way, also visible along other dimensions of operations. So what we found was that as opposed to 12% of all the firms which reported being temporarily closed in the first wave of the Business Pulse survey, only 5% of all the firms reported being temporarily closed. So while the impact was large, the impact has watered down or diluted significantly over the last few months. This improvement in the operational impact is also reflected in firms' expectations. So we asked firms about their expectations around investments, around sales, around employment over the coming 6 months. And what we found was that there's been a remarkable improvement in firms' expectations around sales, investment, and employment. And this is this is obvious from the graph on the right-hand side of this particular slide. And what we found, for instance, was that as opposed to only 13% of firms which expected an increase in sales in the coming 6 months, 34%, so almost a third of all the firms that we interviewed in the second wave of the Business Pulse survey reported that they were expecting an increase in sales. And the same sentiment was also found when it came to expectations around employment and expectations around investments. Things have improved significantly over the last few months, and I think this is something that Derek and Adnan also alluded to in their presentation. But while the impact has watered down significantly, while things have improved considerably, there's a case for cautious optimism, ladies and gentlemen. The case stems from 4 distinct reasons. I will start with the first one. The first one is perhaps the most meaty one, and that's because the pandemic is continuing to take its toll on the sales and sales performance of firms. What we found in the second wave of the Business Pulse survey was that almost 68% of all the firms that we interviewed reported that their sales in the months of Jan and Feb 2021, so just a few months back or so, were lower compared to their sales over the same time period last year, which was the pre-pandemic baseline of Jan and Feb 2020. So while the impact has watered down, it is still bearing down on the sales performance of firms. At the same time, this is not the only reason why we have to be cautious, ladies and gentlemen. This is not the only reason why there's a case for cautious optimism. The other reason why there's a case for cautious optimism is because a number of firms are still vulnerable. And vulnerability in this particular instance is defined as those firms which are either temporarily closed or operating under reduced operations. So what we found in the second wave of the Business Pulse survey was that close to 35 to 36% of all the firms that we reached out to were operating in a state of vulnerability. Now, this is important because these are firms which are fragile, which do not have a lot of financial buffers, and these are firms which can tip over should there be any additional shocks, the sort of shocks that we're witnessing at the moment in this country, in this economy, as a result of the third wave of COVID that we're under. But at the same time, there's also a case for cautious optimism because the recovery so far has not been homogeneous, it's been heterogeneous, and also because firms do not necessarily have a lot of cash buffers. So the situation has improved, but we still need to watch out because things can evolve significantly and rather quickly over the coming months or so. So the messages so far are that the impact was large, that there is a broad-based recovery underway, and at the same time, despite the recovery, there's a case for cautious optimism. But this is not all that we found out through our Business Pulse surveys. We found a lot of other things, and perhaps the biggest thing we found, the silver lining in the crisis, is that the crisis has significantly given impetus to the process of digitization in Pakistan. So we asked firms whether or not they had adopted digital platforms and digital technologies and internet as a starting point as a response to the crisis. And what's really interesting is that almost 41% of all the firms that we interviewed in the second wave of the Business Pulse survey responded saying that they had either started using digital platforms or increased the use of digital platforms. Now, this is absolutely massive because this digitization will pay dividends for years to come. This is a significant number. But having said that, I think, again, as I've been saying all along, there's a case for a more nuanced perspective. And when I say that, what I basically mean is that not all firms have adopted digital platforms and digital technologies and the internet at the same rates. What we found was that exporters, larger sized firms, and firms which are older have adopted digital platforms at much higher rates than non-exporters, than smaller sized firms, and firms which are younger. So, this transformation is happening. It's happening in front of our eyes, but at the same time, it's not necessarily benefiting the private sector in its entirety. It's perhaps just benefiting a subset of the private sector. So I think I've already blown past the time that I was allocated, so I'll be really quick on this particular slide, and I will just talk about the policy recommendations. What we think, there's a case for policy support for the private sector, and the case for policy support stems from 3 different reasons. The big one, the main reason, is that the COVID crisis is still taking its toll on the private sector, ladies and gentlemen. It's still impacting the private sector. It's still bearing down on the sales and sales performance of firms. Secondly, there's a case for policy support because the pandemic has fundamentally altered how firms operate in this country. It's fundamentally altered the operations and operational delivery of firms that are operating in the private sector. And then thirdly, also because there are structural issues in the private sector that need to be resolved almost immediately, because firms, as I mentioned, a lot of firms that are operating in this country are in a state of vulnerability, and these firms need all the support that they can get from the government. Now, what we know is that the government doesn't necessarily have a lot of fiscal firepower to support these firms directly, as opposed to Western countries, as opposed to more developed countries, which have deployed subsidies, direct grants, and have used other more direct measures. The government of Pakistan does not have the luxury to support the private sector directly, which is why the policy recommendations that we have for the government are perhaps more indirect, but these indirect measures will at the same time will significantly ease things for firms that are operating in the private sector. And the policy recommendations are fourfold. As a starting point, what the government needs to do, what we need to do, what the entirety of the regulatory space in this country needs to do, is that we need to enhance access to formal finance for the private sector. Secondly, there's a case for regulatory and administrative streamlining. So we need to ease the regulatory burden that these firms are facing in Pakistan, because they simply do not have the financial bandwidth to be dealing with the onerous regulatory environment under which they're operating at the moment. Thirdly, there's a case for policy support, and this is perhaps one of the most critical recommendations that we have, is that the government of Pakistan needs to support firms in establishing a digital presence. There's a need for this support because a lot of the firms that are operating in this country do not have the financial firepower or the financial means to do this on their own. And then lastly, and also just as importantly, there's a case for undertaking a new economic census. And I say this because we simply don't know what's happening in the private sector, because the last economic census, ladies and gentlemen, in this country was undertaken almost 2 decades ago. It's been 2 decades since the last economic census was undertaken, which is why there's an urgent need to undertake a new economic census, because we need to get a better perspective of what's happening in the private sector, what is the private sector comprised of, and then only based on that can we actually come up with solid recommendations and solid reform programs to support the private sector. So let me end there, and I would be happy to answer any questions that you might have at a later stage. Thank you.
Thank you, Rafe. And that was a very interesting presentation and very topical given the recent conclusion of the second wave. Just to remind everybody, please send in your questions through the chat box. We will be picking them up. But now we would like to move to our panel discussion based on the impact of COVID on the private sector. And we have an exciting panel with us today. Let me introduce them briefly. I believe Melinda did so already, but just as a reminder, we have with us today Dr. Suhail Rajput, who's a Special Secretary at the Ministry of Commerce, representing the government. We have Mr. Almas Haider, Chairman, Synthetic Products Enterprises, representing the private sector. And we have Dr. Wasim Shahid Malik, SPP Memorial Chair Professor at the University of Peshawar, representing the academia. So welcome, sirs. So let me just kick off. First question to you. As representatives of your sectors, what have you felt to be the main impact of COVID on private sector through the lens of your respective professions and sectors? And what are the steps that in your specific sectors have been taken to mitigate the impact? So Suhail Saab, let me start with you.
Yeah, as we have already discussed in detail, that the COVID-19 pandemic has had a significant impact on the businesses, has impacted our private sector a lot, and particularly the micro, small, and medium enterprises. So the first and second wave, I think we have discussed that the impact was bigger and larger in the first wave because of the uncertainties attached to the pandemic, as well as the response of the government was also in grappling in the dark, because no government had the correct assessment of what the situation will entail and how to respond to it. So the second wave resulted in lesser damage, I believe, but the third wave is still on, and we are not very sure how will it unfold in future and what impact will it create for the businesses in general. But the government of Pakistan, as the first wave unfolded in the month of March, started with its fiscal stimulus package, given in detail by Dr. Imtiaz, I will focus on the specific measures taken by the financial sector, Ministry of Finance, as well as the State Bank. Government introduced a payroll financing scheme for the small and medium enterprises, which gave concessionary loans to the businesses. And number two was the deferment of the principal and the interest payments. Then the temporary economic refinance facility was introduced, and subsequently the loans to construction industry was also introduced. So these were the specific monetary measures taken by the government. On the administrative side also, the government made it a point that particularly for the export-oriented industries, it tried to help them to open up at a faster pace. So in the month of April and May, the efforts were already underway to get the industry open so that they do not remain closed for a longer period of time. That is why the export of Pakistan was not as gravely affected as happened for some of the neighboring countries in South Asia. And recently also we are seeing that though the exports have remained suppressed in the region, but in Pakistan's case, particularly textile exports have shown a significant growth. And during last 4 or 5 months, regularly the monthly export volume is over $2 billion. So we are anticipating that if the third wave doesn't impact it much, I think we will end up the exports of Pakistan maybe in the range of $25 billion when we end the current fiscal year. The imports are also growing as we have discussed, but mostly it is happening for the raw materials, the intermediate goods, and the machinery, so which is a good sign. But unfortunately, we are seeing imports in the commodity sector as well. We have imported a lot of wheat, sugar, and now importing cotton as well. So, which is not a good sign for the economy. Being an agricultural country, Pakistan ideally should not have been importing these much of commodities, but that has happened for this year. Mainly because of the supply shocks, the crop were not as anticipated, as well as the inflationary trends which we have seen because of the impact of the COVID. So that is happening. The government, for the particularly the on the trade, I think government has coming up with comprehensive policies to ensure that the trade remains sustainable, particularly the exports, and we see growth in that sector. So we have come up with a strategic trade policy, which is in the process of approval from the ECC and the cabinet, which will ensure that the sectors we are currently, the Pakistan exports are focusing on the just 5 sectors. But we are ensuring that at least 17 or 18, including the service sector, shall be promoted through this policy. Then we have also drafted our textile policy in order to make the textile exports competitive in the region. So there are certain fiscal measures in that policy, as well as the to keep the energy prices competitive for that sector. So these are the major initiatives being taken by the government in the trade sector. I will stop here because I think the other panelists will also like to speak on the point.
Thank you, Sohail Saab. Almas Saab, as an entrepreneur and a representative of the private sector, we would love to hear your thoughts on the measures taken by the government. But we would also like to draw in on your personal experiences as in running a firm in this time of crisis. So if you can tell us about the challenges you faced and how the government response has helped you or not helped you in an appropriate manner. So thank you. Over to you, Almas Saab.
Thank you very much for inviting me today. This is more of a story than a statement of facts that everybody else has done. In February, when the lockdown started, we were all very unaware of what happens in a lockdown. It was both in the private sector and in the government. I remember we have seen curfews in our life. We have seen strikes in our life, we have seen shutdowns in our life, but this lockdown was nothing like what we had seen in earlier. So the government was not very sure. So they put the police on every corner of every city, and they made sure nobody got out of the house. And the people didn't have enough in their homes to feed their children. And so that was another issue that had to be solved. And particularly for the employees of our company and every company, the employers were very concerned about how they will be looking after their employees, because times do change and then you need the employees back. And if you don't look after them in these difficult times, you get into difficulty when the times become better. So everybody had this in the core of their heart, unless they had no money left in their kitties to be able to pay them. I got these messages from Harvard University, my professors over there and others, and they all said that this is a time to stock up because the supply chains are going to get disrupted. And the number they sent to me was that we must stock up for at least 6 months to 1 year with our raw materials, because you never know what's going to happen. And actually, we did a wise thing at that time, and fortunately, our company continued to run because of that. Subsequently, people who did not order their raw materials and supplies got into some difficulty. There were actions available, obviously, moving, traveling. So how do you take your labor to the factory or the plant, and how do they go back to their homes? Special permissions had to be taken from the government. Fortunately, we had done some recession proofing in our company much before this thing happened. And by recession proofing, it means that you have different product lines and different customer groups, so that if something happens to one part of the business, the other part of the business continues. And we were at that time in the business, we are making shampoos and we are making other products which were used during this pandemic, sanitizers and things like that. I gave a challenge to our staff to make face shields, and we developed face shields in the first 15 days of this pandemic. And we were one of those people who really contributed, and we donated thousands and thousands of face shields to hospitals and the government. Even the frontline workers like police, they needed these face shields, and we were supplying to them and donating to them. So that was a very difficult time for everybody. Fortunately, I've never seen the government move so fast and so quickly. The first thing that happened was they gave us some loans at a very low interest rate to pay our employees. So that was the starting point. Then they helped, not in my company, but the smaller companies, they helped them in their electricity bills and gas bills, and then they helped the industry in many other ways. So that was fantastic. I've never ever seen the government being so responsive and so friendly. So that gives you a good feeling that you are in the right country with the right set of people. Joblessness was, when all the markets were closed. I have been the president of Lahore Chamber of Commerce also, and all these shopkeepers were part of my constituency, and I know what happened to them. The shops couldn't open, the employees couldn't go to the shops for several months. And so everybody was collecting money, and zakat was one good way of collecting money and getting the food and staples and oil and tea for in packs, and sending it to all of these people. So we all together, I think we put our act together and we muddled out of this difficult time. Now I think we are more used to it. The second wave and the third wave or the fourth wave, everybody is expecting this thing to continue for a year at least, or maybe more. Even the stories about the vaccine are not perfect, because this virus seems to be mutating as we are told. I'm not sure if it is happening or not, but this might take a much longer time, and people are now much more geared and organized to be able to handle this difficult situation.
Thank you, Almas Saab, and it's very heartening to hear that your experience, you adapted your business accordingly, and you have also felt impacted. You felt a positive impact by the government's measures. I will now move to Dr. Wasim. Dr. Wasim, what role do you think that the academia can play in informing government policy in such a one-off events that have occurred, like the COVID? What role can the academic research help inform government responses, that is?
Thank you very much. I think the role of academia in such crisis is to conduct research first of all, or inform policy making, and then to evaluate and comment on the government policies. Government has taken certain measures to minimize the effects of this pandemic, as this was an economic crisis, not only a health crisis, but it was also an economic crisis. So government has taken certain measures. Now, as academician, my job is to evaluate those measures and how those measures affect private sector. First of all, the private sector has been hit hard by the pandemic, and this is a fact. But this situation also provided an opportunity for creative destruction. As a question is asked about the permanent trade deficit in Pakistan economy. So the issue is Pakistani firms are characterized by low productivity, lacking innovations, which put them at a poor competitive position in the world. For example, this is reflected in the Global Competitiveness Report 2019. Pakistan ranks 79 out of 141 on innovation capability and 131 out of 141 on ICT adoption according to the Global Competitiveness Report. Now, in this scenario, there is a room for government intervention. And what is that? That is the prime responsibility of the government is to provide external infrastructure, but the subsidizing trainings of businesses for adoption of new technology and linking policy support with digitization can also contribute to the overall efficiency of the private sector. Government can also design a special package for firms that close their operation in the shock year by providing loans and linking the aid program with adoption of modern technologies. The firms that closed their operations were mostly small firms working in the informal sector. So by helping them establish new businesses and supporting an adoption of new technologies, these firms can become efficient. Now, my second point is that growth rate of real GDP was negative in fiscal year 2020, and it is expected to remain below historical average in the near future. This will add to the pool of unemployed youth, and through hysteresis effect, it can add to natural or permanent level of unemployment. It also limits the opportunity of learning by doing, which opportunity is there if labor is working and businesses are open. But it limits the opportunity of learning by doing and keep output below potential level for a time longer than expected. On the other hand, under the IMF program, government is committed to fiscal consolidation, which is reflected in double-digit growth in tax revenue in the first half of the fiscal year 21 and a significant cut in the development expenditure. Now, there is a trade-off between fast recovery in the real sector and the fiscal consolidation efforts. So the short-term pain of the fiscal consolidation is justified only if the long-term gain in terms of higher growth outweighs this pain. However, given the vulnerability of a number of firms in the pandemic situation, possible permanent effects on unemployment, and the fact that fiscal consolidation may generate long-term cost when productivity is endogenous, it is not advisable for the government to start fiscal consolidation efforts at the middle of crisis. The need of the hour is to give a big push to economic recovery first, and then start focusing on fiscal consolidation. And the last point which I would like to make is regarding the relative effectiveness of the fiscal and monetary policy, as the fiscal stimulus and monetary packages were announced for the private sector and private businesses. But what about the effectiveness of those packages? As rightly pointed out by the Almas Saab, that fiscal measures, despite their inadequacy to reach a significant segment of the society and business community, proved helpful in mitigating the effects of crisis. This is evident from the Business Pulse survey, as firms demanded extended fiscal measures in the second wave of the survey. As the fiscal measures targeted more vulnerable segments of the society, therefore these measures led to more equitable distribution of resources. But this is not true for monetary policy measures, because monetary policy measures contributed more to asset market recovery than to real sector recovery. The equity market decreased 33% during the first 3 months of 2020. But after a massive reduction in policy rate, the market rebounds 60% during the later 8 months of the year 2020. Similarly, housing prices also rose by about 12 percentage points in February 2021 on year-on-year basis. So none of the indicators of real economic sector witnessed such growth momentum. So this created an inequality, and this led to inequitable resource distribution. So asset holders gained, but the real sector actually lost. Thank you.
Thank you, Dr. Wasim. You've raised very interesting points, especially on new technologies, and this ties into some of the questions we are getting as well on digitization. And I will now turn to Dr. Sohail Saab, that we have a question on how can the digital wave that is being sweeping the country, how can the government give it further impetus to like bolster the resilience of the firms in the current context? And we've also seen that digitization by private sector is itself an impediment because it brings in people into the formal sector. And because, as Dr. Wasim has mentioned, the fiscal stimulus, the fiscal impact can only affect the formal sector. It doesn't really affect the informal sector. So there might be a hesitance for firms to come onto that. So how would you see the government's role in harnessing the digital wave, how to bring it forward, how to encourage firms to use it, and how to translate that into maybe formalizing the economy a bit further? Dr. Sohail, you're muted. Can you please unmute?
Okay, thank you, Nida. Can you hear me now? Okay. Yes, I was mentioning that if you can see some silver lining in a dark cloud, then digital promotion of digital payments is one of the positive aspects of the pandemic. And I think that this development, which have taken over the last 1 year, might have taken 5 to 6 years to happen if we had not got this pandemic. So the government has to come forward in order to harness this potential, which has been unveiled by this pandemic. Government has now an e-commerce policy. E-commerce policy is targeted at increasing the trade through the portals. Through this policy, we have now National E-commerce Council as well as the provincial e-commerce councils, and those are meeting now regularly in order to find out the policy options for digital payment systems. This policy is targeting and is initiating a program by the name of PARC ESME program, which will be initiated to identify, train, enable, and connect about 50,000 SMEs in particular for the e-payments. And focus will be on the geographically underdeveloped areas of the country to harness their potential for online marketplaces. For this, we are also collaborating with Amazon and seeking their technical help in rolling out this program. we are targeting that maybe in next 5 to 6 years, we will ensure that most of the payments will be through digitization. The State Bank is also working on an international payment gateway system, and that is also in the pipeline. So that will also promote the e-payment systems, and certain incentives are being created in the tax policies as well to promote the digital payment systems. So these are the major steps being taken by the government to promote digital payments. But the major impediments, number one is missing data for the micro and small enterprises. We don't have very reliable and credible data. We were struggling. I remember I was in Ministry of Finance at that time when this crisis was unfolding, and we are trying to find out how to target the MSME sector. The Samida is one organization. We thought that they might be having some credible data, but unfortunately it was not there. So we have to rely on these proxies like the utility bill payment, so we can give relief through deferment of their electricity payments. So those kind of data sets were relied on. So it's very important to have a comprehensive economic survey as mentioned by Rafe, and to have a good, strong data for the MSMEs in order to target them for the future interventions, particularly on digitization. And number two, there was a joint survey by Asian Development Bank and Samida, which shows that only 50% of SMEs were aware of government's aid packages. So the awareness campaign, how to market these steps being taken by the government, this is one of the weak area of the government. So we were not able to take all our efforts to the particularly those micro and small enterprises which are located in rural areas or which are in the those areas which are geographically underdeveloped. So this is another key area. So the lack of data as well as the lack of awareness. I will cite these as the two important impediments which need to be overcome in order to ensure that we reach out to the maximum firms. Thank you.
Thank you, Dr. Sohail, and absolutely, and I'm sure Dr. Wasim would agree with you, being an academician, that data is a primary concern and a constraint for everyone involved in the research facility as well. I'm sorry we can't take any more questions because we are reaching the end of our time, and thank you so much to all the panelists who have joined us and the participants who sent in their questions. And we have reached the end of our event here. I would like to also thank my colleagues and all the participants again. We hope you've enjoyed the discussion, and we hope that we've also addressed some of your questions. The Pakistan Development Update, the video of this event will be found on our Facebook page, and the links to the report as well. We will also be sharing the report with you via email. And we look forward to your participation in the next event. I will now hand it over to Melinda to close the event. Thank you.
Thank you, Nida, and thanks to all of our colleagues in the World Bank, and most especially to our esteemed panel. I've also been watching the questions in the chat as well as on Facebook and on Twitter. And as always, this Pakistan Development Update is the start of a conversation. It's some ideas for the way forward. It's some ideas of where we might be a year from now. It's both a blessing and a curse to make these sorts of projections. But I think a lot of interesting questions have been raised. And if we just go back to where we started, we recognize that Pakistan had a fast response to COVID. We recognize that things are looking up, but we're far from being out of the woods. And I think our panelists helped us think through some of the key indicators we'll be watching and some of the key policy decisions that we'll also all be sort of counting on as we move forward, particularly to support the growth that needs to come from the private sector. So to be continued, please look for the future events on these topics. And thank you very much for joining us today for the launch of this conversation. Thanks.
Thank you.
Thank you.
Thank you.